To talk business now on the programme. We're going to focus, in fact, on Nvidia, the California tech group famous for building the chips that are powering the new artificial intelligence revolution. Its latest earnings call there showing there's still more room for growth, isn't it, Charles?
That's right, Stuart. There actually had been worries among investors before Nvidia shared its results that the meteoric rise the company had been going through might start slowing down, but that was dispelled. Revenue in the last quarter of 2023 came in at just over $22 billion, over 260% more than a year prior and ahead of market expectations. And their forecast for this quarter is also showing sustained growth, with a revenue estimated to come in at $24 billion, over 230% higher on an annual basis. This has boosted Nvidia in the stock market, which had already gained $400 billion this year alone, reaching a total valuation of $1.7 trillion, making it one of the top listed companies in the US, one of the top three at one point last week. In after-hours trading, Nvidia stock currently trading at 9% higher at over $735 a share, and it's boosting other chip makers' shares too, like Advanced Micro Devices, AMD, Broadcom, and Marvell Technology. And also, it's actually led the Nikkei, the Japanese stock in the exchange in Tokyo, to post a record high this Wednesday that it hadn't seen since the dot-com bubble in the early 2000s.
Yeah, it's pretty impressive, isn't it? I mean, what has Nvidia's success been built on then?
Well, the company was founded in 1993 and made its name initially as a maker of graphics cards for video games. But as gaming developed, the power needed to keep up with increasingly intricate graphics needed to improve too, to the extent that people outside the gaming world started to take notice of these chips and their processing ability, and started using them for increasingly intense computations, for instance, to develop artificial intelligence models. And this really took on a different dimension in 2022, really fast forward in time here, with the success of ChatGPT, the chatbot developed by OpenAI, which has lifelike responses to our queries. That chatbot was trained on 10,000 graphic processing units created by Nvidia and those were used in a supercomputer that was created by Microsoft. And as artificial intelligence technology is gearing up to upend all kinds of different industries, Nvidia appears to be the company that will fuel a lot of these changes. About 40% of its customer base is concentrated, 40% of its revenue is concentrated in these customers, the world's biggest tech groups that are leading the charge in AI: Amazon, Meta Platforms, Microsoft, and Alphabet, the group behind Google, obviously.
Any challenges then going forward, Charles?
Well, in its earnings call, the company said that demand for these chips will continue to outpace supply, and this means there is room for a competitor to step in here, a company like AMD, which we mentioned earlier. And on top of that, Nvidia's customers, the four big U.S. tech giants we mentioned earlier, are working on developing their own in-house chips. So Nvidia will have to find ways to adapt to these new realities. And on top of that, one of the world's biggest market for these chips is China. And because of geopolitical concerns over the kind of power that AI can provide, Washington has decided to curb the export of the most intense, the most powerful AI chips designed in the US, those made by Nvidia. Well, the group is working hard to find ways to still gain market share in China, or keep their market share in China, while staying on the right side of the rules imposed by the White House. In the past, China represented about a quarter of Nvidia's revenue.
Charles, thanks very much. Charles Pellegrin, our business editor, with that issue for us here on France 24.